Coming up, another North Star Trader Market Minute. North Star Trader uses technical analysis to review stock picks made by fellow YouTubers and industry professionals. Please be advised that we are not your broker. This is for educational and entertainment purposes only. Trade at your own risk.
Hello everyone, this is Paul Prescott for North Star Trader. I've been missing in action for quite some time, but now I'm back. We've been busy in the back room making some new indicators that we're very excited about, and I'm here to share with you today what we have and also give you a link to our website where you can use them yourself. So I'm very interested in any feedback that you have about how they may work for you. Right here we have what's called the bull-bear line, the termination line, and the NMAC. These are three brand new indicators that you can trade with. So let's take a look at some live charts and see how they work. All right, the first chart I like to look at is Moderna. There is no one on the planet that's not familiar with Moderna. If we would have purchased this stock back right near the COVID crash, and obviously this stock did not crash during the COVID crash because of what they were doing for COVID. And if you purchased this stock around $24, which was a few months after the crash of the market, and you sold it even where it is today after it pulls back, that's a 1,600% return. If you sold it, lucky enough to sell it at the top, which most people aren't, you're talking about a 2,200% return. Now, I don't think anyone would complain about that. The reason I like this bull-bear line is because you don't have to think about it. You don't have to day trade. You just leave it there. And you just worry about it if it were to breach this yellow line. This is the bull-bear line. Now we see that it came down right in this section here and touched it right here. We call this a technical touch. It's close enough. It's called a T-touch. And over here we move on. You can see not once did it come down. And here's the second time it got close. Never had to do anything for 2 years, and you would have gotten 1,600% on your money. You can't complain about that. And that's just using what we developed here, calling it the bull-bear line. Anything above that, you'd be bullish. Anything below that, you'd be bearish. Now, if you wanted to play it a little closer to the vest and you wanted to jump in and out a few times, trying to maximize your profit or save you from a big downturn, you can play it with the NMAC, which is the new indicator that we just developed. You would have to play the crossovers. Now, what I like to do on the NMAC is not necessarily just play the crossovers, but I tend to leave it in place when this fast line is above the zero line. The zero line is this flat line here, and you can see the cyan line is the fast line. As long as that stays above the zero line, you generally get price appreciation. Now, you see it dipped below here just a little bit, but resumed. So anytime it's above the zero line, you stay in the trade. She dipped below, you get out. When do you get back in? Well, you like to get back in on crossovers of the slow line. This one was a little bit of a head fake. This one was a perfect place to get in. Now, you can see you're trading a little bit more often here, but this is a daily chart. So this is 9/7 to 10. This is, a month and a half worth of time. So it's really not that often. But you are trading a little bit more often than just leaving it there for 2 years. Now, not every stock performs this way, but this happens to be a great company that is performing incredibly well. So the NMAC, the way to use the NMAC again is to play the crossover of the fast line over the slow line and look for the cyan line to be over the zero line. So I would get in the trade right here when it crossed over, and I would get out of the trade right here when it crosses below the zero line. So this is the place you'd get out. That's a place you would get back in. If you didn't want to look at it so often, like I said, go back to the bull-bear line and just use that. You don't have to do anything. You just let it rip. Now, let's take a look at stocks that haven't appreciated that much. Let's just take a look at the Spider, SPY, over a 2-year period. Here's the COVID crash. So using our rules, when would we get out? Well, one of the two times to get out is when it breaks the bull-bear line. That's one place you can get out. Or when it breaks, when the cyan line on the NMAC breaks the 0 line. So this is the place you would have gotten out, right here. Right, so you would have taken a little bit of a hit, but you didn't have to ride the whole market down like most people did. And then, when would you get back in? Now, I remember back then people were calling me, what's going on with the market? Well, as this was falling, I said, it's not time yet. But once the NMAC crossed over, that was the candle to get in on. And that happened to be on March 25th of 2020. And that was the time to get in. Obviously, you came up, took another dip down. You didn't make any money for a week, but the NMAC still held. So you're still in the trade, and you let it ride. And then look what happens. NMAC gets above the 0 line. You get some serious price appreciation from that point on, and you could just ride this whole thing out. It clears, and at this point, it clears the bull-bear line. And I'm going to zoom out now, because since, I would say a year ago, a little more than a year ago, it cleared the bull-bear line, and you could have just stayed in the trade the whole time. No need to be doing day trading. This is called short-term investing, and you would have done incredibly well. Let's assume you got in right here where I said to get in. All right, you may have gotten out and gotten back in just a couple of times, but not missed out on much of it. That would have been an 81% return on your money in a little over a year. I don't think anyone can complain about that. So one more thing I'd like to talk about is the termination line. Let's assume that you missed this trade here, and you were asleep at the wheel, and it caught you by surprise. When the stock breaks this termination line, you really want to get out. Now, it broke it here, but it recovered. So you can not get out, you can stay in, but once it got down to this level, you'd want to just get out of the trade, because we don't know how low it can go. This is the ultimate cutoff point. Same thing with up here. Now, the reason I stayed in this trade is because the NMAC was above the 0 line. The cyan line of the fast line of the NMAC was above the 0 line. So even though it broke through the bull-bear line and the termination line, this indicator still held, so there's no need to get out. If you wanted to play it safe, you could have gotten out and just waited a little while and jumped right back in. So what I'm saying is this system is flexible. It's flexible for your trading style or your short-term investing style. I don't really like to call it trading because it's really not a day trade. It's more of an investment style. And you can use either the bull-bear line, the NMAC, you can use those in conjunction, or the termination line. So let's take a look at another one. We like to look at Apple because everyone loves Apple. And this was during the COVID crash over here. And you can see what happened on the termination line. Closed 1 day below the termination line. It recovered after that. Great place to get in. Even before the NMAC crosses over. Why is it a great place to get in? Because the termination line is an ultimate cutoff. As long as you're above there, you don't really have to worry about it. And if it were to turn and roll over, come back down, you just get out again. You don't worry about it. But once you clear that and you're over the termination line, you get in the trade and you let it go. And look what happens from that point on. She gets above the bull-bear line and almost a year goes by. You don't have to think about it. And then for 1 day, she closes below the bull-bear line. Now, you could have gotten out here. Like I said, your choice. Your choice to get out if this crosses below. If the NMAC crosses below the 0 line, that would have been a good place to get out. And then you wait. When do you wait? You wait for the NMAC to cross back over again. Like I said, the system is flexible. But it's been making us money, and we like to just share it with everyone else. Now, we don't give recommendations. We're just giving you a few tools that you can work with that we've developed, and we really like them, and we think it has a lot of promise. All right, so I hope you enjoyed that. There's a link down below where you can use the NMAC and the bull-bear line and the termination line on our website. In the future, it will be a monthly fee to use that charting system, but right now it's free for the public, and we'd really like to get some feedback to see how it works for you. All right. Thank you.